Hello, everyone. This is Noah Rosenblatt. I am with UrbanDigs, and it's Friday, and that means this is your Week 9 Coronavirus Manhattan Market Update. The goal of this update has always been, since the beginning, to track the coronavirus impact on the Manhattan residential markets on a weekly basis and see what's going on the way down, see if we could find a bottom, and see if we could track the recovery. If you ask me where we are in the phase of the cycle, we are still trying to find a bottom. All right. So let's just get right to the numbers and let's talk this out. Okay. Supply came in at 5,040. When I first started doing this, supply was at 6,582. We should probably have supply well over 7,000 at this time of the year. So if you think about inventory in New York City real estate, there's not a lot of inventory. A lot of that inventory just went off the market, or a lot of that inventory that was going to come on the market did not come on the market, most likely because sellers probably don't think they're going to get the bid. That's typically why sellers don't list. So one of the things we're tracking is weekly new listing activity with the hopes that sellers are coming back to the market. And we'll get back to that in a second. When I look at my supply chart, okay, and this is interesting to point out, all right, we are bottoming, meaning the curve of the decline, that steep decline is starting to flatten, and we're starting to find a bottom here. About 2 weeks ago, we were going straight down, and I thought we were going to go right past 5,000 into the fours. But over the last 2 weeks or so, we've been bottoming out. So that's telling me that the pace of listings off market is starting to slow a little bit, and that the pace of listings not coming on the market is starting to find a bottom a little bit. All right. But by all means, this inventory is much, much, much lower than where it should be at this time of year. We should probably have well over 7,000 listings on the market right now. So buyers out there need to understand that, yes, the market's dislocated. Yes, the market is highly illiquid. Yes, you're going to probably get discounts, and yes, you're going to get no negotiations, but you're not going to have the options to choose from. And of those restricted options, those smaller options, how many sellers are going to hit your bid if you're bidding down 15, 20, or even 25%? Okay, so that's why the market is so dislocated right now. There is a big spread between bid and ask, and that gap has widened, and it's still wide, and that's not going anywhere. Okay, so let's move on to pending sales. Pending sales is our measure of demand. When we first started doing this, this was at 2650. This has been gradually declining, as one would expect with this kind of a crisis. We're down to 2243. You're going to see supply bottom and turn around and go the other way well before you see pending sales bottom and go the other way. That's just the nature of our cycles, right? First, the stuff is going to come on, and then the contracts are going to get signed. So this is going to be a very interesting situation, because usually in our active season, the supply comes on and the demand follows. Well, we don't have an active season in 2020. There is no active season in 2020. All right. So we're waiting for this number to go back up. We're waiting to reopen the Manhattan markets, get back to business. And soon after that, we should, and I emphasize should, we should start to see this number start to bottom out again. So this is not going to bottom out and start to recover until weeks after this number goes up. And that'll be a first indication of demand. That's what I expect. Okay. Doesn't mean it's going to happen. All right. So we got to track and see whether or not those deals are actually starting to be signed. Right now, we are at the low point in deal signed, and I'm going to get there in 2 seconds. Okay. So let's go to my dashboard and let's take a look at our weekly checks. Okay. Weekly checks. I'm going to go take a look at 1 week active inventory. When I did this a long time ago in week 2, 1 week active inventory was 138. Okay. Week 3, 80. Week 4, 82. Week 5 was the low point in terms of new listing inventory. It was at 70. Since then, we started ticking up. Week 6, 73, week 7, 73, week 8, 92, and now we're coming in at 105. That's a good sign. You want to see sellers start to come back on the market. For a frame of reference, we should see about 400 of these a week. So we're still well below what we should be having coming on the market, but it's starting to tick up. Okay. Now let's switch to 1 week contract signed. Where did you come in at? And this is the number I am concerned about. That is a low, low number. We're starting to get to that period where most of these deals now are probably pure sight unseen Corona trades. So clearly there's just no market right now. There's just no market right now. There's no deals being signed. This should be at 250 or thereabouts. It's in the low 30s. When I first started doing this, it was 136. Then week 3, 74, week 4, 88, week 5, 65, week 6, 51, week 7, 57, week 8 last week was 43, and now we're coming in at 36. This is the lowest number since I've started tracking this. All right, so the deals are not happening. This is why I know that we're not bottoming yet. We're probably getting close to it, but we're not bottoming yet. And this is the number that I'm really looking for to start to turn around. When is this number? How low will it go? When is this number going to start to come back? Are we going to get down to the 20s before this comes back? The teens? This is what we have to track, okay? Finally, 1 week off market, that missing link off market. Are sellers taking their listings off market or not? That came in at 192. When I first did this, it was 424. Week 3 was 409, week 4, 270, week 5, 197, week 6, 122, week 7, 117. That was the low. Week 7, 117. And then in the last couple of weeks, we started bouncing back and off market. Week 8 was 160. Week 9 this week is 192. That is not a good sign. We do not want to see listings coming off the market. We want to see listings staying on the market. We want sellers to say, I'm comfortable with this market. I know where it is. I understand where bids are, and I'm willing to do it. Okay. Right now, we're still not there. So if I take a look at where I think we are in this curve, we're still falling. We're still trying to find a bottom. Price action, we don't know where price action is. This is a highly dislocated market, and there's only a couple of hundred deals signed. And if you're a broker out there trying to figure out how much down this market is, like everyone else, the best thing you could do is go to contract signed in the last 3 or 4 weeks in your sector of the market. There's probably going to be 1, 2, 3, or 4 of them, very small, and talk to those agents and find out what they've went through and how far below the market are those deals being hit at. Okay, that's the best that we can do right now. Broker to broker collaboration. We also have a forum, our forum on UrbanDigs. You can access me, you can access John, you can access our real estate experts that we brought in on our forum. Ask any questions you like. This is the time for us to collaborate and corroborate with each other. Intel is gold. I hope this was helpful. This is your week 9 coronavirus Manhattan market update. We will continue to do this every week, every Friday until this market comes back to normal. I guarantee you that, so that we can have the bullet points and the talking points to tell our clients what the hell is going on out there. Until then, this is Noah Rosenblatt with UrbanDigs. I bid you well. Have a great weekend and stay safe. Bye-bye.